Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic. We made it our mission to help you guys own it. What a fantastic day, guys. Just unbelievable. We're going to get into a bunch of stuff, so much drama going on. But first, as we always know, let's get everybody up with the starting five. John, Gossen, King D for like King Dingling. Saint God, Bogan, Hank, you guys are our starting five. Lindsay Heiss is also in that starting five. If you guys missed the starting five, you didn't make it, it's probably because you didn't hit that notification bell. So hit that notification bell, subscribe, and hit that thumbs up on your way in the door. Guys, what an unbelievable day. Right now, I'm looking at the markets, and I'm seeing green across the board. We got the S&P up near highs that we haven't seen since before the year started. It's up at 46.35. The S&P is. It's good for 1 1/3%. It's up at 60 points almost. The Dow is up another 351 points, good for 1%. Nasdaq's up 2%, 288 points. Crude oil, WTI crude actually fell below $100 a barrel. Back up right now. It's at 104.67. And what's going on? Why the hell are we seeing this today? A lot of it revolves around the peace talks, the ceasefire talks between Russia and Ukraine. Can that be trusted? No, it can't. That can't be trusted, but the market's responding either way. I think it's pretty hard to trust a country that is, known for misinformation. You have Ukraine obviously corroborating some of those, positive talks. However, I still do not trust them as far as I can throw them. I can't throw them very far. Can't throw them at all. So, this is a great move in the market today. I think there's also other things that play here. Historically, we see rising interest rates and stocks, equities, they end up following suit. We just look at history, right? And we see that. We also saw some interesting stuff today as well with the yield curve. Now, the yield curve inverted very briefly for the first time since 2019. And as you guys recall, 2019 we saw that inverted yield curve late 2019, and then we saw the stock market crash in 2020 because of COVID. Now, the bond yield isn't going. The Treasury, U.S. Treasury, is not going to be able to predict something like the pandemic taking place, but it has been a come in and step with a potential recession ahead. Now, should we be worried about a recession? I don't think so. There's a lot of good things going on in the market and in the economy. Consumer sentiment is starting to look a little bit better. It's not great, but consumer spending is super strong. We have a lot of cash on the sidelines, not just from institutions and in big money, but small money as well. People like you and me who are the middle class folks that have a very high savings rate we haven't seen for the better part of 10 years, up around 12%. So I think, you look at the way that things are coming back strong, in a rising rate environment, it usually means the economy is doing extremely well. Now, obviously we know that, just because the economy is doing well doesn't mean that the stock market has to. Of course not. They're not correlated with each other all the time. However, earnings are correlated with the stock market, and I think that those earnings are going to do extremely well. We're about a month, 3 weeks away from the start of earnings season, which, by the way, I cannot wait. I cannot wait for earnings season to start because it is bleeding boring. We do have some headlines that have happened, right? The Fed, all that stuff, but man, it's so boring without earnings, and there's not a whole lot to discuss. However, in the meantime, we can talk about stuff like today, what happened in the markets. And so we have a lot going on. I'm going to actually talk about the yield curve in a later video, so be on the watch for that. So make sure you're subscribed and hit that notification bell to get notified when that comes out. I got a lot of interesting tidbits of information as to whether or not we're going into a recession because of that inverting curve. If you guys aren't familiar with the inverting curve, it's essentially that the two-year yield has gone higher than the 10-year yield. It's not supposed to do that. We're not supposed to see that. And so that's why there's some analysts and some investors that are on a little bit of an edge. There's some headwinds ahead of us, of course, but I do not think that we're going to see a recession this year. It's very rare that you see a stock market crash and then 18 months, 2 years later, it crashes again. It's 2 years. It's been 2 years. So 2 years later, it crashes again. I don't think that's ever happened. So not to say that it can't. And there's a lot of people out there that are saying, well, there's so many instances in which this has happened. We've seen it. But the yielding curve doesn't necessarily indicate a crash or a recession even. There's a lot of explanations as to why you could say this is happening. But I think right now there's just so many unknowns, and that could create a lot of havoc, a lot of angst and worry. And so I think the market itself is just going to climb this wall of worry. So in my opinion, I think that we're going to see stocks go up from here. I mean, a lot of the stocks, and we've talked about this for the last, since the first of the year, right? That the market has been pricing this in. I mean, we saw 40% of the S&P correct, 20% or better that was down. So there's been a correction, guys. I just don't think that we see too much of this actually falter. Now, if you guys have been following me on Twitter, I said this. I retweeted this out today. I said, and on March 3rd, I said, March is going to be a face ripper. I'm all in. Now, during this time, the S&P was not doing great, right? I mean, we saw the bottom of the market in February 24th. And then it almost tried to retest it again on March 14th. It didn't quite get down there. And then look what it's done after that, right? I mean, we've had one red day on the S&P since March 16th. And it's looking like today we're going to see it again. So, crazy day today. Unbelievable day. And I told my folks in the Chaos Crew this, by the way, too. So if you guys aren't a part of the Chaos Crew, what you need to do is hit that join button. The join button next to subscribe gets you a watch list from yours truly every morning before the market opens. I put out 5 stocks that I think are actually worth watching before the market rings that bell. And we can get access to our Discord groups, portfolio reviews, trade alerts from yours truly as well, all by hitting that join button next to subscribe. You could also go to ownthechaos.com if you don't see the join button on your phone or wherever you're watching from. And you can get access to the Chaos Group. Would love to have you guys there. But I told everybody today, too, don't be afraid to take some profits. Okay, we've seen an absolute ripper on the S&P or on the SPY and the markets in general. I think there's going to be some time for some consolidation. I think maybe there's a potential pullback. We can see the SPY pullback maybe to the 200-day moving average, which would be a pretty hefty correction from 460 all the way down to around 444. So we take a look here. Let's take a look at the chart one more time. It's sitting at 444 is where the 200-day moving average is. I think that there stands a reason that we could see this pull back down here for sure. But there's also the case that you could make that maybe this rips higher. I mean, look at this. This was a key resistance that we just blasted right through. So the resistance on the SPY was around 457, and we just opened right up above that today. Maybe it comes back only to around that 457. Old resistances become new supports. We know that. So perhaps there's a case that can be made there. But if this does keep ripping, there's nothing that's stopping this to 467. So the market can continue to climb, folks. But one thing I want to caution you with is that, we've seen these corrections before, or we've seen rips like this before, and then there is profit taking. So, I did stress to our folks over in the Chaos Crew, I said, hey, listen, while this is a great day to celebrate, and really the last 2 weeks have been phenomenal, you might want to consider taking something off the table. It doesn't have to be everything, but something, just in case there is a pullback and you can add back too. So obviously not advice that I'm giving. I'm not a financial advisor, but there is something to be said for not everything goes straight up every single day. So consider that. But man, just what an absolute day. We have some really great earnings this afternoon after hours. We got Micron. We also have Lululemon. We got Restoration Hardware. We got Chewy. Those are all going to be reporting after hours today, and I'm super pumped for those, particularly with Micron. I already saw a couple people chatting in the chat about Micron being one that looks like a lot of people are watching. And so this one's going to be interesting. They're expecting about $1.97 on their earnings. Earnings per share is $1.97. The average estimated revenue is around $7.5 billion, $7.52 billion to be exact. And some interesting things here as far as their outlook is concerned. So there's a lot of concern about slowing of growth, right? PC demand is down, and that's where kind of Micron makes a lot of their money. And so I think that there's definitely a case that could be made for that. But I'm actually looking forward to Micron potentially crushing these earnings. We're seeing a lot of earnings from retail in general. And the consumer is ridiculously strong right now. People are still spending money, a lot of it. And I don't see this demand across the board slowing down anytime soon. We can see inflation slow down, but consumer demand still be high. And so I think that that's going to be something to certainly watch out for. I like Micron's earnings today. I also like Restoration Hardware. That stock has actually pulled back significantly over the last few months, along with everything else. But this was a COVID winner. Let's take a look at that chart real quick, and I can show you exactly what's going on here with Restoration Hardware. Came down and touched the support down here at what is this? We'll call it 330. And obviously it's had a monster bounce all the way up to 382 from that bottom, along with a lot of other stocks. This is a very critical area. This is the 50-day moving average. On this yellow line here is the 50-day moving average. Even with this incredible bounce, the RSI is only sitting at 53. So there's still plenty of room for this to run before we start talking about an overbought scenario. So this run potentially isn't over. And I think that there's a catalyst that could be earnings here that could lend itself to another move up on Restoration Hardware. I think that you look at how people are spending, and I really like these earnings coming up. So their expected earnings per share on Restoration Hardware is going to be, oh shoot, I lost it. There we go. $5.58. Expected revenue is around $931.78 million. God damn, for some furniture. By the way, if you guys have ever been to Restoration Hardware, that $900 million for the quarter amounts to probably about 6 or 7 couches. So it doesn't take much. Restoration Hardware is ridiculous. A couple of couches, maybe a table, a desk, perhaps. Restoration Hardware is wild. If you guys buy anything from Restoration Hardware, I am now your new best friend. Nevertheless, we also have Chewy on the docket, and this is one that I'm actually concerned about. So Chewy, I mean, I'm not saying that they're going to miss earnings, but this is definitely one that has not done well, has peaked all the way back in February of 21, and hasn't really come back since. Now, you can make the argument that perhaps this is a sexy-looking trend line that's about to be broken here. And I think, though, that earnings could be a struggle for them. Their estimated earnings per share is a loss of 8 cents. So if they come in below that, again, in a rising rate environment, we don't want any parts of stocks or companies that are reporting losses, because if they come in and miss these earnings, they're going to get absolutely wrecked. So be careful going into earnings if you're a Chewy holder, or you're trying to buy earnings or trying to buy the stock before earnings, because I think there's a lot of risk involved in here. Their estimated revenues are at $2.42 billion. So one thing that could hurt them is not consumer demand, because I still think it's there. I think costs associated with shipping, inflation's still here, guys. We're not out of the woods yet. So I think that while they could come in and meet or beat revenue numbers, my concern would be beating those earnings numbers. Again, a loss of 8 cents per share. We've seen this a lot from some of the other companies related to the space, or even companies in general that are reporting losses. We're seeing them kind of come in and not really meet those expectations on earnings per share, despite the growth in revenue. So there's definitely a conundrum here. You're going to be excited because they come in and beat revenue, but then also costs are still high. So then they're still coming in for a loss. I don't know. I'm a little bit concerned about it, but nevertheless, they do have earnings today, and we'll see if they end up beating. The next one here is Lululemon. This one in particular, I am excited for. We saw Nike smash earnings, absolutely obliterate them a couple weeks ago. And Lululemon's coming in with an expectation of $3.28 per share. Average estimated revenue is $2.13 billion as the market has officially closed. And I'm looking for them to potentially beat. I think that, if it's one thing that we're seeing from a lot of the consumer or retail companies that have reported already, is that demand's still there, and we're still seeing some really strong earnings. Again, you could also raise the argument here on costs. How much is Lululemon impacted by cost? But if they've been able to navigate inflation and pass on some these associated costs to the consumer, then I think Lululemon is going to be in some pretty good shape. They don't have to worry about shipping and all that stuff as long right along there with Chewy. So I think that in this sense, on the retail side of things, I think Lululemon could potentially do really well. Again, estimated earnings per share is $3.28. And then we have estimated revenue around $2.13 billion in athleisure wear. That is wild. Rajiv bought 15 shares of Lulu just a while ago to play the earnings. I like it. A little fun money. I'm not, there's always these people that talk about, oh, and Lulu is now starting to move. A lot of people talk about, oh, don't play earnings. It's gambling. I mean, look, if you got a little money set aside to have a little fun, ain't nothing wrong with that. It's the people that go all in before earnings that are really going to get wrecked. So just be careful, but I'm not mad at that at all. So right now, Lululemon's actually up 2% here after hours. Now that the market is officially closed, we got Micron right now, also moving up. Now that's up 5.5%. Ooh, boy. All right. Earnings are in, baby. It looks like. So Micron is getting a solid move on right now. Savvy Money Show. Can you share the stream for me and tag all the earnings today? Just as a side note, I know that you're really good at doing that, and I know that you're next to your Twitter machine, so I appreciate it. I forgot to do it today, but looking in to see where these Micron earnings are, it looks like they beat earnings per share. $2.14. What did I say? $1.97 was the expected earnings per share. So they came in at $2.14. Their revenue, just a minute. The revenue looks like, I'm just trying to cross-reference here, $7.79 billion. Is that right? $7.79 billion. Yes, $7.79 billion on revenue, and unbelievable move there. That is really, really nice. So pretty good earnings from Micron. I'm not surprised by this. I'm really not. So really nice numbers from Micron. Again, if you guys are just tuning in, they came in and beat earnings, $2.14 per share. The expectation was $1.97. So beat pretty handily on those. And also beat on revenue, $7.79 billion. They were expected to come in at 7.52. So really, really nice beat for Micron. I know that Rajiv is happy. A lot of you other folks are happy as well. And really nice beat for Micron. I love that move. Stock now is up around 4%. It shot up all the way up to around 5%. Now it's early. As we always know, there's this initial knee-jerk reaction to earnings. We have to see what the guidance looks like. Anything else that are in those earnings that may or may not help or hurt the stock. But so far, so good on Micron. Checking in on some of these other ones. Chewy had earnings today. The stock's starting to move a little bit as well. By the way, guys, I see 132 of you hanging in here. I appreciate you guys allowing me to be part of your afternoon. If you wouldn't mind hitting that thumbs up, I certainly would appreciate it. We got 33 likes, which I know we can do better. So here's your reminder. Hit that like button to show support for the channel and the stream. Thanks so much for that. I appreciate it. No real numbers on Chewy just yet, but I will come back to that. Lululemon. No numbers, it looks like, on them yet either. So let's come back to Micron. I mean, that is a monster move on Micron. Still moving up here, now up 4.5%. It's looking good, guys. Let me know. What are the most exciting earnings for you today? Just out of curiosity. What are you guys excited about? Restoration Hardware looks like it's starting to move a little bit. Let's see what's going on with RH. Here we go. Those earnings look like they might be out. Don't have those numbers just yet. But the stock is moving here. It's up around 1%. Restoration Hardware announces Chairman and CEO Gary Friedman plans to exercise expiring IPO stock options and sell a portion of the shares to fund exercise and satisfy resulting tax obligations. That's the latest news that I'm seeing in here. So it looks like maybe their earnings are out, but I don't have solid numbers just yet. So as soon as they come out, I'll let you know. But this, oh, holy shit. Just kidding. The earnings are out. Look at this. This stock's up now 8%. Boom, baby. What did I tell you? Restoration Hardware sold 20 couches. Not 9. They sold 20. Oh, my God. Oh, here we go. Restoration Hardware announces intention to execute a 3-for-1 stock split, guys. That is why the stock is moving right now as well. Stock's up now 7.5%. Another stock split catalyst here for another company. It seems like it's starting to be a trend now. We saw obviously Amazon and Google announce that. Restoration Hardware now. Look at this. Unbelievable move here. That's all the news that I'm seeing right now is the 3-for-1 split right now taking place. So that'll bring the stock down to around $125-ish per share as of the close. But unbelievable move on that. That is wild. Is this the Lululemon? Here we go. Okay, so Lululemon. Thanks, Devin. Are those the Lululemon numbers, buddy? Look at us. Look at us being a village. Earnings per share $3.37, beating the expectations of $3.28 of $2.1 billion, missing expectations of $2.13 on revenue. So it actually did a little bit of the opposite here. I'm a little bit surprised, I got to be honest. So Lululemon comes in and misses on revenue, but then actually beat expectations on earnings per share pretty handily, honestly. So pretty good there. This is good too. Lululemon said that next quarter it sees revenue coming at 1.53 to 1.55 above consensus estimates of 1.41. So the growth worries here, right? Obviously aren't there. I mean, look, so I'm going to come back to the earnings in just a second, but I gotta say this, because how many of you guys have been seeing headlines on CNBC, on Meet Kevin, on whomever, the big four, we know who they are, throwing a bunch of fear in your face about how the market is slowing down or how the economy is slowing down and how we're going to see potential crashes and recessions. I mean, how many thumbnails can you see of impending doom in the stock market, right? And this bullshit right here is why you're following me at Own the Chaos, because I tell you everything that they're saying is absolute bullshit, because this right here shows me that we're still seeing growth. Lululemon, Nike 2 weeks ago said, guess what? People are still buying shit. Lululemon's now saying, guess what? People are still buying shit. We're seeing growth. Micron comes out and says, consumer demand's still there. This is what I'm talking about. This is what I'm talking about. Good shit. Good shit. Restoration Hardware is dropping like a rock. Let's take a look. Yeah, now did a big old reversal. Oh yeah, that's right. I forgot Sundial also coming down are reported today. Melody Hutchinson says the economy is slowing for sure. Yeah, okay. So it is going to slow incrementally, right? The pace in which most people and most of who their name is talking about it slowing significantly is not there, right? Yes, we could see economy slowing because of rising rates. That's always a thing. However, the consumer is still so strong that we're not going to see the type of slowing that many are expecting. There's just like too much fear out there. And I think that that's why it's still going to be good to be owning stocks and equities in general. So to back myself up a little bit, yes, I would agree with you, Melanie, that it is slowing, but not at the pace in which many are saying it's going to be slowing. It's fair. Okay. Restoration Hardware now tanking. Let's see what's going on there. Why are we seeing a bit of a sell-off? Revenues increased 11% within our guidance range, despite the virus variant that magnified supply chain issues the second half of the quarter. That is one headline I'm seeing. I just saw this on Twitter. It says Restoration Hardware tumbles 7% post market after quarter sales fall short of estimates. Somebody says I'm not buying a $20,000 couch. Speaking of $20,000 couches, Love, ticker symbol Lovesac. Lovesac sold or crushed earnings, by the way. Another good one. Was up 20%, 21% today. That's what it closed up. It was up higher than that. It was actually up as high as 30%. They have $15,000 couches too that they're absolutely crushing. So seems like Lululemon did well. Played money seems to have worked. Absolutely, Rajiv. Congrats on the Lululemon trade. Congrats on that. Check back in with Lulu. Now up 5%, continuing to move up here. Looks good. Looks damn good. Restoration Hardware is still taking a beating here. They might have lowered guidance a little bit, but let's check on. I haven't checked. I'll check back in on Restoration Hardware's numbers. Micron's still doing well. It's up 3 1/3. Check back in on some of those numbers. So if you guys are just tuning in, Micron crushed earnings. They came in line, I believe, on no, I'm sorry. They beat revenue as well. I'm thinking of Lululemon. So they came in at $2.14 per share. The expectation was $1.97. Revenue came in at $7.79 billion versus the $7.51 billion expected. So really nice beat on that. Really nice beat from Micron. So those are your numbers. They expect they came in with a better than expected guidance as well. So Micron looking really good here. Another thing to note, I don't know if I said it. I think I saw it in the chat. Lululemon also authorized a $1 billion stock buyback program. And this is going to be a continued theme. I think not Lululemon, but they didn't start it, but we're starting to see even more and more buybacks. We're also seeing a lot of mergers and acquisitions. This is going to be a continued theme for the rest of the year, I believe. So I really like that catalyst as well. Unbelievable. So really nice moves out of all of those. I'm digging that. So Lululemon's now up another 5.5%. Checking back in with Restoration Hardware. It's down 10% now. Woo! The initial reaction on that split news has now been all given away on Restoration Hardware. I think I might have missed something here. So Restoration Hardware is citing softening demand that's coinciding with the Ukraine war. I don't know what buying $20,000 couches has to do with Ukraine, but maybe it has something to do with their resources, the raw materials they get from that area. I'm not sure. Okay. Interesting. Maybe it has a lot to do with supply chain for Restoration Hardware. Stock's down around 10% here now. Yeah, no kidding. Chewy is tanking. So this is something that I actually kind of thought was probably going to happen. And I told you guys at the top of the show that I thought Chewy was at the highest risk of the earnings today. Stock's down now 14%. Let's see if we can come up with those earnings numbers here for you real quick. Let's see if I can find them earnings. Stock is getting hammered right now after hours. But like I said, we've talked about this. Stocks that report for losses and then they come in and miss expectations are going to get the most punished. Is that the right way to say that? They're going to get crushed the most. So really tough stuff for Chewy. Stock's still down 14%. Here we go. Revenue came in at 2.39 billion versus 2.42. So they missed on revenue. I'm looking for earnings per share here. So they did miss on revenue. I mean, that's still a monster number in revenue to still come in for a loss. You know what I mean? Like, what are they doing? What are they spending money on to bring in that kind of cash flow? This is interesting. I don't have numbers yet on Chewy other than those revenue numbers, but interesting stuff. All right. Checking in with some of you guys. Vinay says Micron had lower guidance, so this beat was a no-brainer. Let's go back to Micron. Yeah, so it's interesting, right, Vinay? Because we see this a lot, especially from tech stocks, where they kind of sandbag the numbers, right? I mean, we see this from Apple all of the time. Do we not? We see this from Apple. They try to temper expectations, and then, the smarter investors are like, yeah, okay, whatever. Whatever you say, right? So, yeah, very interesting stuff. If you guys are just tuning in, make sure you hit that thumbs up on your way in the door. I certainly would appreciate it. Got 180 of you guys hanging out in the stream, so thanks so much for being with me. Would restoration hardware have a negative impact on Home Depot and Lowe's? I don't think so, because it's a whole different demographic, right? We're talking apples and oranges on restoration hardware. And I think, upper class people are buying stuff from restoration hardware. It's not going to be the case for Home Depot and Lowe's. Could we see a slowing in demand? We're not going to see the same kind of demand that we saw during the pandemic, right? Where people were just stuck at home and doing more shit at home and gardening and everything else. I do still think that we see an uptick. I just don't think the growth is going to be as fast as what we saw during the pandemic. I still think both of those are good ones to own if you don't already. However, which I know you do, Rajiv. However, I think that looking at Lowe's and Home Depot, this is a whole different ball game in that area of the market. So, yeah, I think if I had to choose between the two, I think I'd probably go with Home Depot, but you can't go wrong with either one, in my opinion. All right. Good stuff, guys. What are you most surprised about? Let me know in the chat. What are you guys most surprised about these earnings so far? Let me know. Go back and see if I can't find some numbers on Chewy. Earnings per share. So if you guys were paying attention, we actually did get revenue numbers. I was just looking for earnings per share. My guess is they probably missed those too, but don't have anything from them just yet. Oh, here we go. Net sales of 2.39 billion, improved 17% year over year, yada, yada, yada. Net loss margin of 73.8 million. Jeez. That is crazy. I mean, for a monster company like this to just continually come in for a loss, it just can't get behind it, Like, maybe one day they'll be profitable, but that is just wild. And they have such a huge mountain to climb, right? Because their competition's so stiff, especially when you look at, Amazon. I mean, their direct competition is Amazon. Looking at Chewy right now. Let's pull up the chart on Chewy. Stock's still down 14 and a third. I don't see that coming back. Not for a bit. But yeah, guys, let me know what you're most excited about. Or what surprised you the most on this. If you guys are just tuning in, Lululemon came in, beat on earnings per share. They actually missed revenue numbers, but then announced a $1 billion buyback. So that's why the stock is now up 6.5%. Congrats to those of you who are in Lululemon. Let's take a look at the charts on some of these and see where the expectation is from a technical analysis standpoint. So obviously you can see that Lululemon has had a really monstrous move from the bottom, from 278, now trading at 366 in the after hours. So I have an area marked here at 382 on Lululemon for potential resistance. With it sitting at 366, we could certainly see it come up and test those 382 numbers, or that 382 number. Interesting point to make. Okay. It was a support here back in October of 21, tested support and held again in September. We saw another test of support in August of 21, and then again in July. So this came down and tested that support very well and held strongly. And then the overall market just kind of tanked in November, right? When Omicron reared its ugly head. And then obviously continued pressure on, just all kinds of fear revolving around the war and rising interest rates really decimated Lululemon. Now you can make the argument that it got way ahead of itself and it's still overpriced. And I wouldn't disagree with you all that much, but the momentum is certainly here, and they raised guidance for the next quarter as well, above expectations to where the street was expecting. So I think that there's definitely some upside here for sure. And if we see a move on Lululemon above this 382 area, which by the way is also the 200-day moving average, we could see some serious momentum. Now, what I will say is we look at RSI and it's starting to approach an overbought situation, which we have seen multiple times. This go well above the 70 mark on RSI. It's around 80. So there is some more room for this to potentially run if it wants to. I got to say, though, I think that if we see a run up tomorrow and we see some consolidation, just watch for that area around 382, because I think the momentum could continue. If it breaks above 382, which is again is that 200-day moving average and also a tried and true tested support, if it breaks that, we could see some pretty decent fireworks. We see a rejection. There is potential for this to come back down to retest maybe that 360, 350 area. So I really like Lululemon here. The chart is setting up really nicely. We take a look at Micron. I know a lot of you guys were excited about Micron. They came in and did pretty well on earnings. And this one is also very interesting. Today, for the first time, it closed over the 200-day moving average for the first time since the beginning of the month. Leading into the break below the 200-day moving average, though, you can see how this was just in a downward trend. But consistently before the move down in the middle of March, this held above the 200-day moving average pretty well. So closing back up over that today, and then pair that with really good earnings. It's up 4% right now. It's at 85. The 83.52 is also the 50-day moving average. And despite the bounce here that we saw from 68 all the way up to where we're at right now at 85, RSI is still sitting really comfortably in the middle of around the mid 50s. And I really like this too. I think the momentum could certainly continue. We have another resistance here at around 87. Let's mark that out for you guys. Here's 87 resistance. 87 to some change. So I'd watch for that, see if it comes back up and retest that. If we see any pullbacks or profit taking, I think Micron could rest here at $80. So watch that as well. That's going to be an area to watch for that support to retest if we see any kind of rejection, but then also if it breaks up over 87, we could see continued move. So really good stuff there. And then Chewy, I got to say, there's not one part of me that wants anything to do with Chewy right now. Stock's down at $44. The bottom was at 35. I would not be surprised if we saw this retest these levels. However, this could be a tradable bottom. This could be a tradable bottom here around $35, $36 a share if it does come back down to retest those levels. If you're just looking to trade something, this could be a good opportunity if Chewy continues to fall off the wagon here. So really good stuff there as well. Restoration Hardware is the last one. They came in, reported earnings, missed on revenue, and the stock's only down around 6.5%. They did announce a 3-for-1 split, which we saw a major move as a reaction to that, all the way up to 423. It's starting to work its way back up now, though, after falling all the way back down to 340. So we take a look at the daily chart here. I think 320 is that bottom. We can make an argument here that 352 is a new support for it. So watch for it to hold there. We get back above that 50-day moving average. Maybe we see some momentum due to the potential split that's coming for them. 385.69 is where it closed at today, and it's right where the 50-day moving average is as well. So still sitting comfortably here on RSI. We don't have to worry about overbought or oversold situation here. So I think that there's lots of movement that this could potentially make. But those are going to be two spots to watch. That 385.69 is where it closed at today. I'd watch that as potential resistance. And then we have support sitting at around 348.63, thereabouts. So good stuff there too, guys. Wow, what a day. What a day, right? Let's check in the chat here. Let me know what you guys are thinking about. I'm surprised at how many companies are doing share buybacks. Makes sense when the market fell so much. They're doing buybacks because they have a lot of CapEx. They have a lot of money that they've been sitting on to buy shares back for those companies. So that's why we're seeing that. I think we're going to continue to see that moving forward for the rest of the year as well. I see a lot of people talking about Disney as well. Jeff Panicka. Yeah, Disney was one that was also on the watch list for our Chaos crew. Again, if you guys want to be a part of the watch list and part of the community, hit the join button next to subscribe. All kinds of good stuff in there. It's $4.99 a month. You can't beat it. You just can't. It's like a sore ween. So yeah, I mean, it just closed over the 50-day moving average. So Disney looks actually really good too. Appreciate the love, Duke. Thanks so much. Raul Torres says, is there a way we can get access to the earnings watch list, like the daily watch list? I don't have an earnings watch list. I actually just go through Earnings Whispers to see the earnings calendar myself. So you can go follow them at Earnings Whispers on Twitter. If that's something that you guys would get value out of, I would be more than happy to add an earnings list for you guys as well. Maybe we can do that the beginning of the week. Monday, I'll air out a earnings watch list. But yeah, that's where I go to get my information. Brad, what are your top gainer and losers for tomorrow's earnings? Great question. So tomorrow's earnings, we have, let's pull that up. Uno momento. Tomorrow's earnings, we have not a ton of earnings that I'm really all that excited about. So Five Below maybe has something. Paychex is probably going to do well. They all report in the morning. Tomorrow there's iSun. Maybe iSun has something up their sleeve, but everything else, there's not a whole lot to be excited about. I mean, we're in the dog days of earnings, so there isn't going to be a whole lot going on. Again, we have like another 3 weeks or so before we start to get into earnings season again. So it's going to be touch and go here on a lot of the earnings, but today was certainly a particularly exciting day. Rajiv, thanks so much, man. Appreciate the donate. Bro, $50. My man. Thanks so much for that. I appreciate it. Thanks for the donation, man. I did see somebody else donate. I don't want to miss them because they also asked a question. Day trade paid for the $2 donation. Do you have any idea why SoFi went up? I think it just went up in response to everything else that was going up. You know, SoFi is one that I'm in. I'm also in Palantir, and Palantir did really well today too. But most of these other stocks just absolutely killed it. Let's take a look at SoFi right now. This is one that I also had for our Chaos Crew watch list members. Stock was up 10% today, but I think it really just comes down to how it was reacting with the rest of the market. I'm not ready to say that this is in a trend reversal just yet. I would really like to see it get up above that 1050 area. But honestly, I would be even happier to see it above the $11. That's the 50-day moving average, 1106. We can get a SoFi up above there, then I'm going to feel a lot better about it. And I think that's going to be something to watch for as well. Snookeroo says, Miss Fat Man Zoom. Yes, absolutely. Fat Man Zoom's just out there doing his thing. All right. So, guys, good stuff to chat about. I think there's a lot going on today that is certainly a lot of reasons to be excited about, but there's also some fear in there as well. I may reserve talking about the inverted yield curve and also some of the issues with the Biden budget plan tomorrow. Since there's not a whole lot going on with earnings, let's save it for that. All right, guys. So if you want to get my thoughts on the yield curve inverting, where we're going with that, I have a lot of really good stats that I think support arguments both ways, and then you can kind of make your determination. I personally still think that we are bullish in the overall market for the rest of the year. I think we could potentially see the S&P 500 up at least 10, 12% this year. And so that's something to certainly be excited about. And yeah, the new budget with taxing unrealized gains, I think is going to have a much bigger impact than people might realize. Yeah, I mean, we're taxing the billionaires, yes, but there is a trickle down effect, and it could screw us all if that actually goes through. So there's going to be a lot to talk about tomorrow as far as that's concerned. So guys, thanks so much for tuning in. I'll be back here tomorrow live at 3:45 p.m. Eastern time. So make sure you're hitting that notification bell and hit that thumbs up on your way out the door. I certainly would appreciate it. Thanks so much for tuning in. As always, I'll see you all before the bell. B. Smith is out. Bye.